Real estate loans and other financial opportunities mentioned on this show are offered by various companies, entities, and or organizations that may not be directly owned, managed, or controlled by the Real Estate Life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. You're listening to us today on Fox Sports 1590 AM, 94.7 FM, KBTA. Our Sunday audience on K-Earth 101 FM doing the same, but this weekend they're doing it by streaming, or they're doing it by watching us on YouTube at Your Real Estate Life. Now, the streaming is at kvta.com. I'd like to welcome you who are doing that. I'm a loan originator, license number 233410, NMLS 3189. As president and CEO of United Mortgage Corporation of America, you can get started right away. UnitedForLoans.com. That's UnitedForLoans.com. When you go there, you're going to have the ability to play around with a mortgage calculator, get some information on your own. Yeah, you could do your own self-tour, but I wouldn't perform the surgery. Be very, very careful. There's a lot of stuff to navigate when it comes to lending in today's market. Now, you may think you did a good job. Oh, I can do this myself. You're going to leave money on the table. You think hiring a professional is expensive? You try hiring an amateur. It could be very dangerous. You could be losing a lot of money. On today's program, we're going to recap where we are. We're at the end of the third quarter. We're going to be starting quarter number 4. But where are you going into 2026? We're going to recap, and we're going to look at the path that's going ahead, a 2026 preview. Now, with the quarter end, we have the Fed. They were active. A couple of weeks ago, they did have their move. They made some interesting decisions. Now, we're kind of leading into that. We had the first move, said it was going to happen, and it did. I'm telling you, the end of October, we're going to get another one. It's priced in already. And we're also looking at December 10th. We're looking at another move. So as those occur, the bond market is starting to price in these changes. We're starting to see better interest rates. We're seeing a little bit more stability. We're seeing some lower lows and higher highs as we move up and down. Now, any given day, rates are a little higher, and then they're a little bit lower. And that's the timing aspect. Now, mortgage rates are coming down, but they're not yet consistently in the 5s. Many individuals are still getting higher 6s, mid 6s, maybe some high 5s, depending upon how much equity is in the loan to the value, your credit score, and other factors, the types of loan you're getting. People could be self-employed. They could be salaried. You could be getting money from bonuses over time that's allowed or disallowed, depending upon the frequency or consistency. You could be looking at retirement income. You could be looking at assets, depletion of assets. A lender wants to see it last at least 3 years. We've seen the 30-year fixed rate. As you hear, it's about 6.25% to 6.4% in range. You hear that on Thursdays. Now, that Thursday that you hear it is not for the week that you're hearing it. It's for the week prior. So when they mention, hey, we're at 11-month, 12-month lows, that was a week ago. So it's not necessarily news, it's statistics. So you want to work with what's going on today, not what happened a week ago. So that's where you need a professional like myself at United Mortgage Corporation of America to give you that information as it goes right by my desk. Because every day we have pricing, sometimes mid-morning, mid-afternoon, multiple times, ups or downs, depending upon the economic news that comes out. In our next segment, we'll go over the economic calendar and what's ahead and what we're looking at that's important. And that's going to be the all-important jobs number. We're going to be looking at that. But we have existing home sales that are stable but under pressure. We're looking in July, existing home sales increased 2% month over month to 4.01 million annualized. And that was per the National Association of Realtors. We have inventory on existing homes that rose slightly, 1.55 million units in July. Supply of 4.6 months. So it's higher than a year ago, but still mediocre. It gives buyers a bit more room to negotiate. But we need to see better communication between those who want to sell and their real estate professional. Your real estate professional knows what's going on in your market. So when you lead with, oh, I want to list up here and the market's right there, your home's going to sit on the market longer and you may not get that buyer. So it's listening to your professional where they know things will sell because you're not necessarily in this market looking to be the trend setter. So you need to understand the dynamics of your market. We got to look at the new home sales, incentives, seller credits, possibly paying money towards closing costs. We're looking at affordability kind of improving. We're going to go over these aspects, the psychology of buying and lending when we come back right after this break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Welcome to our audience here on Fox Sports Ventura 1590, 97.9 FM, and streaming here on Your Real Estate Life on YouTube and those on kvta.com. You know, we were talking about various items in psychology of the market and what's going on. We're looking at affordability, slightly improving. We have a little bit of wage growth and other items, and hopefully people are starting to stabilize this homeowners insurance. A lot of change has been going on there. My renewal's on November 3rd, and as I got my premiums, of course, you try to see what you can do to hedge them down. But yeah, I've seen quite a bit of an increase. So I'm trying to budget that, and those thinking about earthquake insurance and other aspects as well. It adds up. It really truly does. So these are part of the budgeting items that I talk about. I talk about monthly, quarterly, semi-annual, annual items, making sure that you understand where your budgeting is and where you are when it comes to your monthlies, your monthly discretionary, what's left over. We talk about a perfect financial GPS program, and that's very important. And with that, on Tuesday evenings, we have a live webinar that you can go to 6 p.m. on Pacific time. Change it to your own time zone as you're watching. But I'd like to get you out an invite. If you send an email to me at interest@aheadformoney.com, AHEADFORMONEY.com. I'm going to send you out some information as well as an invite to that webinar. You don't have to be on camera. You don't have to speak. Great information done by a dear friend. And she's going to be going over that, and you can gain a lot of good information. Even if it's not right for you, you're going to get some nuggets that are going to allow you to do things a little bit better and eliminate debt. I'm very much a product to those principles, and I was taking my 26.4 years personally down to 12.3 on my own, and I thought I was doing pretty good. But I actually was able to take it down to 7.9 years under the program. Those additional 4.4 years, 6 figures of savings. And it's not changing your lifestyle. It's just taking advantage of numbers and doing things a little differently. Just like when you're driving in your car, when's the last time you reached in your glove compartment and pulled out a road map? You haven't. Really haven't. You're using possibly a GPS that's getting you somewhere quicker, and you try to outsmart it, and it tells you recalculate because you took the wrong way. So, or you're going fast, and then you got to worry about getting pulled over, right? So this is something for your finances to get you to point A to point B much more effectively. I talked about in the last segment about seller credits. There's some of our transactions we're seeing up to $20,000 going towards closing costs or credits. Sometimes there's issues to a property itself. Sometimes it's not noticeable to an appraisal or other items on the lending side, but sometimes there's just seller credit for other reasons. So if it goes towards closing, that's fine. Sometimes in the past, it used to be non-reoccurring closing costs. It could be closing. So sometimes the seller contributes, sometimes it's the seller and the realtor, sometimes it's the realtor, sometimes it's the lender. Because based on the price that I'm able to obtain, I could raise the rate slightly to pay over time to gain more money up front to credit towards the close. So there are ways to move things around to make sure it's the best timing for all parties involved. I get a lot of questions about locking a loan. Should I lock my loan? Well, you look at the market trends. Now, lately, rates have been going down. So as we look at that, the longer you lock a loan, the more expensive it is because you're buying the money and securing it for a longer period of time. So when you're purchasing and you have a 30, 45-day escrow, sometimes now, I hear you, 15-day escrow. So sometimes they're shorter, but you're not necessarily out of the woods to your timing. So maybe you don't lock the day of the application. Maybe you wait a week or two. Maybe you want to get rid of certain items, making sure the appraisal's in, making sure this, whatever it is. A lot of loans that we've been working on, I've been locking in short term, even 8 days. 8 days because we are clear to close. When we're clear to close, we're clear to close. We're looking at lock, disclosure, draw the loan documents, and we're buying the rate or reserving that rate for the least amount of days possible. That's saving you money. If I lock it 15 days, 21 days, 30 days, 45 days, each of those increments usually have an additional expense. You're paying for that security. But if the market goes down, it would have to be a catastrophic move in order to get a little bit of benefit with a float down. I'm not a big advocate of that. I've actually watched the market and do what I do. Yeah, I'm not perfect, but I'm able to look to save, in the majority of our cases, a lot of money, whether it's a few $100s or a few $1,000s, depending on the loan size. Recently, there was a loan. We were ready to secure the loan. We waited a day because there was some information I saw coming out. And I kind of read the, I can't say tea leaves, but I kind of saw that perhaps rates were going to get better that next morning. So we waited. And of course, I did sleep that night, but it's like, oh my God, it's all on me, right? So we ended up saving thousands of dollars. Now we could have took a little slightly lower rate and kept the same dollars, or we could choose to save the dollars and keep the same rate. So we saved the dollars. And that was a huge difference in their communication and what we were doing. And that's having a professional on your team. You're only as good as your offensive line protecting you against the defense. Once someone comes in, you're a scrambling quarterback. So you want strong players throughout. And it's very difficult usually to get that. And sometimes one player has to subsidize for another player, and it happens. Sometimes you're kind of thrown together and you weren't working together as a team for too long. You get a new escrow company, you got a new this, you get a new that, you get a new close, and you got to see different styles. But sometimes then I have to play my game. I have to make sure I play my game the way I know it needs to be played in order to help you save money. And when I see the other taking on their responsibilities and taking their job seriously and protecting you against the defense, it allows me then to focus more on the lending side because I'm able to not have to subsidize the other. And it goes both ways. Those team members see the same thing and they have to understand that. But that's us laying down that game plan, understanding you, your why, understanding where you're going and what you need to have occur to make sure you're sleeping better at night. An escrow should not be, and a purchase should not be stressful. It shouldn't be. It really shouldn't. If you have the right preparation and the right information, you're able to make these decisions and understand what's coming ahead. I recently had a purchase transaction where they were working with a builder. They were in the dark. They didn't know what was coming next. And I mean, it happens, but I was kind of always about a week to two ahead, letting them know the next steps that they're going to get from that side, letting them know whether they're going for their upgrades or the homes, the foundation, or their walkthroughs, or all the things that were going on. I've been a part of many transactions over 38 years. I've been a part personally about buying new homes. I've actually bought, one, two, three, four new homes over my life, brand new homes that were being built. So I've seen the process, understand some of the things. Oh God, woulda, coulda, shoulda. So I anticipate, I understand. And it's not to be an alarmist, but it's also to be a realist of what is going on. So that's really important. And that's part of the negotiation. You know, you look at the costs, you look at that lock, you look at the timing, and then you're negotiating to get your price, you get seller concessions, you're looking to do that. And sometimes you're doing a buy down of your interest rate, maybe for a year or two, depending upon your idea of how long you're going to be in the property. All these things matter. Lining 20 people up, everyone's not going to choose the same loan. We have individuals now that are looking at adjustable rate mortgages. They're looking at going back to the traditional ones. They have loans that are fixed for 5 years or 7 years. Now, it's funny, the 7 year sometimes is priced better than the 5 right now. Okay. So that's interesting on the kind of inverted yield curve of sorts. But we look at those, or you take a fixed rate, you buy it down for 1 year, 2 years, or 3 years. If you gain money from a seller or another, and it's not yours, it's other people's money, not a bad idea. But you have to look at that where you spent money at the close, and if the money was credited towards the close, isn't it over credit? Maybe you do need the buy down. If it's not, maybe the money today was better than over time, but then you need to know how to budget and use your money wisely. It's not, hey, honey, we got some money in the account. Let's go spend it. Well, okay, you got to make sure it comes back in. Okay, you got to know what consistently is occurring. If you got an endless supply of every month, you know it's coming. Okay, you take a look. You take a look at that. So, you know, you look at all these items, you look at the affordability aspect. That's why you get pre-approved. That's why you actually reach out to us at United Mortgage Corporation of America, united4loans.com. We offer loans. We're not for the interest that you're paying. So give us a call, 888-543-3980. Go to yourrealestatelife.com for the show site, or unitedforloans.com for our company. And you can get started. But it's understanding the types of loans in your individual scenario. The down payment, your credit score, your income type. It's putting those three things together and more in order to come up with the equation to come with the best solution. We have self-employed individuals that are getting loans outside the boundary of full documentation because they write down their expenses. So that's understandable. So in doing that, we have what is called non-qualified mortgages, bank statements, whether it's 1 month, 3 months, 6 months, 12 months, 24 months bank statements, personal and or business. And we're looking at all the inflow, outflow, but we're not using a tax return. For investors, we have DSCR loans, debt service coverage ratio loans. These loans, they allow the property to cover. So whether it's 1-to-1, it's you got more rents than you do expenses, we look at that. There are no ratio DSCR loans for vacant properties in those scenarios, but the rates will vary from something with a 7, maybe even an 8. But the thing is, it's an investment property. If the numbers make sense as an investment property, the interest rates are higher than that of a primary. I say in most circumstances, because sometimes individuals have different quirks that perhaps would not be accurate to say that. But under most circumstances, that is true. So we're looking at these options. We also have individuals 55 and over, 60 in some states, 62 in others, where you can do a reverse mortgage. You can also use it as a purchase. If you have money coming from a previous sale and you want to put it into your new, you can actually set up a loan where you have optional mortgage payments. You still pay your taxes, you pay your insurance, you pay your HOA and keep the property upkeep. But you have the ability to have a line of credit for that differential if there is enough equity for it. And based on the algorithms and the actuarial tables and everything else, we will compute what you can and what you need to do in down payment. Now, if you own a property, you should look at the option because it allows you to keep that money monthly rather than putting it back into the home. So you have that extra money in case you need it. Now, if you don't need it, okay, maybe you get a line or a loan that's a reverse behind your existing if your interest rate is appropriate, where now you have that access for additional monies while keeping that current mortgage. You could do that with a reverse second. You also have the ability to utilize a home equity line of credit. A home equity line of credit allows you to have just like a credit card, I guess, where you have that credit card you have, but maybe you don't use. You have an equity line where you have the availability, but you don't have to use it. But I would tell you, if you're in that position and you have a first mortgage, I would show you how simple interest can be used to pay off amortized interest. And that's going to get you further and faster through the amortization, saving you interest volume. Interest volume. That's what you'll learn about on Tuesday night, 6 p.m. Send me that email, interest@aheadformoney.com. interest@aheadformoney.com. I'm going to send you out some information, but also an invite. If you can learn some of these principles, you're better. You're getting closer to the hole, but you're still three-putting. I don't want you three-putting. I want you getting in the hole right away or a one-putt. If we can get you to that notion of efficiency with your finances, eliminating interest volume, eliminate debt, start looking at creating wealth. Depending on where you are in your lifetime and lifespan, you have the ability where maybe you're accumulating assets. Maybe you're still in position where you're looking to save for college for the family. You're looking to provide for your own retirement, making sure you don't have to work forever. But we want to look at your individual setup. Going to the webinar gives you information, but it's not the ultimate solution. I want to have a one-on-one with you. I'm never too busy to work or speak with you, whether it's lending or budgeting. Budgeting will lead you to better decisions when it comes to lending. So I'd like to do that preparation with you or for you. If you have a loan already, great. If the loan's fantastic, great. We'll evaluate, understand if there's something better to do, putting you in a better position to eliminate your debt. A lot of times people say, you hear the commercials on TV, oh, call this number, da, 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 we'll go ahead. Okay. I can't say anything wrong because different solutions are right for different people at different times. But stopping your payments, damaging your credit, negotiating for a lower settlement, and then getting taxed on that settlement from the IRS and also paying a portion to commission for that negotiation. What's left on the table at the end is very small. You need to read and understand. But now you have damaged credit. I'm not talking about damaged credit here. You owe what you owe. But I'm talking about eliminating interest volume. Those of you who own a home, whether you've done financing recently or many years ago, we had those 4 boxes across the top, and you had that annoying large number on the far right-hand side that people told you to ignore. That was the amount that you were paying over the life of the loan. Now you have a closing disclosure. On the very bottom, it says TIP, total interest percentage, and total interest paid. If you look at that, if you're at 5.2% or higher, it's over 100%. Now, what does that mean? If you borrow $400,000, you're not only paying back 400,000, which is the principal, you're paying back 800,000, 100%. You're paying back double. And you pay a lot of that in the earlier years when your balance, of course, is higher, but it's also disproportionate. So I challenge you, go online or pull out your mortgage statement. Take a look at it. Take a look at the total payment, not with taxes and insurance, but the total payment, principal and interest. And you tell me which one's higher, your interest or your principal. Now, some of you are saying, oh, my principal's higher. Okay, you've had the loan for a longer period of time, or you're paying more towards your principal. You're reducing, but you're throwing darts. But most of you are paying over that of the principal. On a normal amortization, it's 18 to 22 years before you're 50-50. I want to accelerate that for you. Let me show you how. So we're talking about getting into a home at the right price and the right negotiation and having a professional on your team. But we're also talking about eliminating the debt as quick as possible. I did talk about points. I talked about getting into the calendar for the economy. I am going to do that. But we're going to wait because I hear some music and telling me to take a break. I'm Mike Harris. We'll have more on the other side.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little
What are
scary
we
right
playing,
now. But every
Chardonnay?
crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on K-Earth 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
I believe I've some work already to do. My kids all need brand new shoes.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris. I'm president and CEO of United Mortgage Corporation of America. And I've been doing this a long time, 38 years. Now, United Mortgage Corporation of America, we're approved in 5 states, California, Colorado, Montana, Texas, and the state of Washington. But I can do debt service coverage ratio loans in pretty much most all states, about 46 of them. So it's easier to tell you what states I don't: North Dakota, South Dakota, Nevada, and one of the others. I don't know. But we can go over that. But depending upon where you're looking to get financing, love to have a conversation with you. If I'm not approved to lend in that state, I'll let you know. And I have other professionals I can probably refer you to that I know can do a good job. There are some of us out there that do good jobs. There's others that will charge you maybe too much, and then all of a sudden they come down. And I hate when someone quotes me something and then all of a sudden they go lower, which means, gee, what were they trying to get away with, right? It bothers me. And then it also troubles me dearly when someone has someone, they come to me, I have something better, and then that other person comes lower, and then they feel they want to go back, but that person, anyhow, it's a psychology thing. It's a psychology thing. And, we were looking at the local statistics of what's going on. We're looking at the median home price here in Ventura County of $870,000, down about 1.5% over the past year. Not too much damage. Not too much damage. The days on the market seem to be up a little bit. So we're watching that, because, again, people are still trying to list higher and thinking they're going to set the market trend. So you got to be careful about that. You got to be listing where the market is to gain that sale, rather than going, well, let's raise it up and try to be that market trend, because then your home might sit depending upon the competition. Now, if the there's other homes on the street or in that market, all of a sudden that are playing the right game, you're now sticking out and you're overpriced. And then you have, oh, there's been a price reduction. And then they're looking at those statistics saying they're higher because people are still not maybe listening to their professional. So those are the things that I watch very carefully. I talked about the Fed on last week's program. I talked about how the Fed did lower one of them wanted 50 basis points. It was the new Fed member, but it was 11 in favor. Now, rates are usually best right before the Fed move, right before. So we lost a little, and now it's marginalizing, getting closer as we get to the October meeting, end of October, right before Halloween, and we get that ready. But with that, we have an economic calendar, very busy week. We're looking at on Monday, the Dallas Fed manufacturing survey, regional business activity, early quarter four snapshot. We're looking at Tuesday, we've got consumer confidence from the Confidence Board, key holiday spending outlook. So a lot of these are forward thinking. We're looking at the ISM manufacturing, PMI, and construction spending directly tied to housing and investment. Thursday, weekly jobless claims as normal, factory orders, hiring, and capital spending signals. So these are important general trends that we look at, but when they come out at 5:30 in the morning, our time here in California, I kind of look at those very carefully because it gets the trend of what's going on with interest rates and pricing that day, whether the bond market, mortgage-backed securities, and how they're reacting, and understanding where money is going. So on Friday, we get the big one, September jobs report. So we're looking at non-farm payrolls, unemployment rate, wage growth, and we're looking how it influences the October Fed decision. A lot of these things get priced in before, as I said. So as we get that, whether it's a shocking number one way or the other, it's going to be important because the weak jobs report can make the rate cut more likely. I already think it's happening. But then it starts leading to December and the December 10th meeting. So if we look at that, short-term rates could fall right away. And then people say, well, we're waiting for well, it's happening already. So if we have a strong wage growth or hot inflation numbers, could we go the other way? Maybe, but I think it's a little hiccup. And it's a question on your timing of your transaction. And a lot of times what we're doing now with the general trend of rates going down, whether it's 6 months from now, a year from now, if we price the loan correctly and don't pay a lot to get in, or if you had a $800,000 loan and someone's telling you, hey, we're going to buy down your rate, we're going to pay 2 points. Well, that's your 16,000 perhaps. Now 16,000 spread out to gain a rate that was not bought down. How many months is it before you like me? So if you're planning or can look to redo or update or change the loan, that makes a difference. Marry the home, date the rate, divorce the debt. We talked about divorcing the debt earlier. Get the debt, leverage, get in, and try to get out of it as soon as possible in the most efficient manner. You could always change that rate. It's the way that you're paying that rate that's important. Whether you're paying it amortized, simple, those things really do matter. It's not about the number. It's about how it's set up. It's very important. And then using that timing to eliminate it faster. These are the things that I'm passionate about, saving you money. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. I mean, why would I toss it here and toss it there? I mean, just this past week, I was on the phone because I got something that came over on my computer telling me I didn't make a payment on an automatic payment. They didn't take it. So now I got to go police that. Well, I policed that. It got taken care of. But, getting that annoying item when you have it taken care of and you think everything's good, you're relying on someone else to do their job. And it's hard to do everything. But in this day and age of calling and getting on hold, and then, oh my gosh. Now, one of our agencies, tax related, I've been dealing with for a few years, and I got some good news. Supposedly in 3 days from now, they're going to mail me two of my 5 checks that they owe me from 2023. And then they're still working on the dates of the other two. And then the other, okay. It's progress. Oh my gosh. I was on hold and then talking to them. It was 2 hours and 45 minutes. Now that's small compared to the whole process that I've been going through. I think I think I make a joke. I think I had hair when I started, but no, I didn't either. Okay. But I'm trying to keep the brain cells in at this point. But holy cow. So this week, Monday through Friday, I'm watching what's going on. I'm watching the general trend, seeing where I can save more money for my clients. Right now, pricing wise, I'm tossing an extra 40 basis points on majority of our loans based on qualification, where I'm able to buy the rate down an eighth or give that as a credit through the pricing. I'm doing that. We don't have a lot of time on it, but for rate and term refinancing, including FHA, VA, rate and term, in order to help people save money or move debt, we're throwing in a 90 basis point. So it's getting close to naught, but the market's starting to price it in. So we'll look at what's best for you. It's hard to say, oh, I got this vanilla. No, you might be chocolate. You might be a strawberry. You might be banana. Who knows? So we want to see what's right for you. But we have these in our toolbox. I have first-time homebuyer programs, grant programs, bond programs, VA, 0% down. We got all sorts of fun little things that we can try to do to save you money. There's grants. There's based on your address before you move. $5,000 for this. You can do that. I mean, all these things are out there. And it's the professionals who are going to show you the money that's buried somewhere else. It's out there. And I want to talk with you. 888-543-3980. That's 888-543-3980. You need to talk to your professionals. It's your CPA, it's your estate planning attorney, and your realtor. We collectively want to help you. When we come back, we'll talk more about the Money Max program. I'm Mike Harris. We'll have more after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, 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 must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. Quick recap. Fed did lower a quarter basis point. That was the other week, and with one dissent. Now, one wanted a larger cut, but we're kind of getting a nudge and we're seeing where the market's going. It's a little cautious after that, but again, we're looking at these items coming out. The economic reports, including that jobs report on Friday. Now, I talked about the Money Max account. I talked about a Tuesday night webinar at 6 p.m. I wanted you to email me interest@aheadformoney.com. When you send there, I'm going to send you some information, but I'm also going to send you an invite to attend. You don't have to be on camera. It's a 1-hour webinar, 6 p.m. Pacific time. Now, this program is a financial GPS. Just like GPS mapping and showing you the fastest route, it includes all the detours and the traffic when it comes to your finances. It looks at the date of your statement, the date it's due, the optimal amount, the minimum, but the minimum plus the correct additional that you can do based on your discretionary to eliminate the right debt at the right time for the right reason. If you line up 6 debts, you have 720 factorial math combinations. My gosh, get it right one month. Good luck next month. I mean, it's crazy, but it's getting you the quickest way to pay off your debt, reduce interest, and build equity, all while keeping your money liquid and accessible. It's allowing you to sleep at night, understanding how much you want in your checking and or savings, and that's all you need, a checking and savings. We're not asking you, or you don't need to have an equity line, have insurance, life insurance that can be used to become the bank. And an equity line can be useful depending upon when you got your first mortgage. Has all the interest been going through the volume because you've had it for a lot of years? Or are you in the earlier stages where you could still chunk off a lot of that interest that you haven't yet paid? These are the things that we evaluate. I would have a meeting with you, understand where you are. We would then input your items. We want to be accurate because we want good numbers and good results to be accurate and not hopeful. So we want to be correct. So we will do that. We'll have a 2-page report. We'll go over that, understand it, find out what the program can do for you. And you find all of that out before making any commitment to go forward. This is not a sales job. This is you. It's your life. It's your budget. It's your finances. It's your real estate life. I want to make sure it's good for you. So for you, I mean, we're looking at accelerating just your mortgage. No, it's also your credit cards and everything else, your student loans, personal loans, everything. And it prioritizes. You can choose to do different methods through it. You could do a debt snowball, a debt avalanche, or take this one or take that one, whatever. You can do that. But it will also show you that how many years and months it takes to pay off your debt. And perhaps it may add to that time, depending upon not going perfectly to what this algorithm program using all the lines of code will let you know to do. It could do predictive analysis. It could do spreadsheets. It could do anything of that. And we would demonstrate and show you how to do so. But we've seen clients cut down a mortgage a third, a half the time, even 5 to 7 years remaining, all gone, all gone. I mean, we've seen it happen. I mean, it's incredible. By keeping your funds liquid, it keeps that reserve, and you can alter that reserve, put money aside, and still pay off debt while you're building a reserve, comfort, allowing you to put your head on your pillow and sleep at night. The math is all driven to pay off your debt. Now, some of you are investors. You own multiple property. Your goal is not to pay off all that property, but it's to continue to get more revenue, more income, more doors. It also allows you to do that as well because you can utilize it as your savings aspect for your down payment and other things that you're doing for your next set. You can also do predictive analysis by adding another unit. You can see what it does to the debt structure. So we've had people, let's say, being paid off all their debt in 8 years. They add another property. Instead of going up to 38 years, they're paying off all their debt in maybe 13 years or less because they have rent coming in to offset the mortgage payment, whether you're using a DSCR loan, debt service coverage ratio, or they're fully qualified. But showing the rent offset, it's basically a non-event. If it is a slight event, then of course it goes up a little bit more. But we've seen people add 1, 2, 3, 4 properties and still be under 20 years. Under 20 years, 4 properties, all paid off, all with equity. And then you look at your planning and usage of those funds and the equity lines and access to use those funds if necessary or what you want to do so. And that's a whole nother avenue. But we have individuals who own 50, 60, 100 properties. And this gives you that insight and direction. It handles it. Blink your eye and you got all your new numbers and figures based upon what you put in. So I make the appeal to other professionals who are listening or watching today. If you're a realtor, a CPA, or an advisor, maybe you're a divorce specialist, divorce attorney, mediator, financial planner, insurance. When you talk with clients, you're trying to, of course, in all ways, eliminate debt so you can create wealth. You're trying to eliminate tax. All these things are about their money. If they understand their money better, it would make your life easier and it would allow you to expand your opportunities with your clients. If you're a consumer, love to talk with you. If you're a consumer, as I said, love to talk with you, but love to talk to the people in your circle of influence. I'd love to talk to your CPA, your financial advisor, all the people that are involved in your decisions that you look to. Because if they're able to offer this to their clients and create efficiency on something that wasn't taught in school to most, that's where we need to be going. With the speed of information and efficiency to solve problems. This is your finances. It's ultimately your problem, and you're just getting the bills. And they're telling you to go ahead, but you're getting the bills. I want to show you how to eliminate those bills and have a better understanding and a place to go. It's really great when you're able to go somewhere, get great information, and they don't talk back to you. Pretty good. Efficient information that you can use or not use, but you know it's mathematically correct. Kind of troubles me when I go somewhere and I'm still live in front of somebody and I'm going over things and they're computing it and they're bringing out a little scratch pad and they're still trying to carry the one and you're hoping you're getting the right answer. I want that right answer and I want it now. And so should you. 888-543-3980. That's 888-543-3980. You know, I was looking at items and calls that were coming in and questions that we've been getting. We've been asking about the lock and float, and I mentioned it earlier. And it really is subjective to the individual. If you're purchasing, you have a timeline, 15, 21, 30, 45-day escrow. So we can really have maybe up until about 8 days prior on a purchase because we need to draw docs. We need to look to close, get everything going that way. I could fund the loan and do that on the same day that you sign. So I have that in our playbook, but I don't want it to be comfortable because a lot's going on for you. So we evaluate market, just like this week, we have unemployment coming out Friday. It's a big number. So as we have clients coming up to that, I'm kind of seeing the general trend of market, how the conditions are, and maybe I make those decisions with our clients and we talk about it to maybe secure the loan because of the amount of days we have for bounce back or recovery. So there's much more than, oh, I'll get you a loan. I do a lot more than that. It's about saving you money. So on a purchase, we need to eliminate some risk, but we need to understand our timeline and what's coming out and what's occurring. Now, if you're closing now before the October 10th, or I'm sorry, December 10th and the end of October, October 29th, I believe is the Fed meeting, then we need to make those decisions accordingly because the best rates are usually right before the Fed. So that's really important. Same thing on a refinance. We have a little bit more flexibility because we're not as maybe under pressure, but in some cases we are. I'm working on a file right now where they're getting divorced. Husband's being bought out by the spouse, and we're getting the funds. So that's happening, and there's a timing eye. So we're working that out, but we're trying to get the best result for our client, and we're trying to milk that the best way we can. So things are close, but we watch these things. We watch that jobs report. We watch the strong numbers, and that could send rates a little higher if it's strong. If it's weak, then the rates should be getting better. So we'll see how the market is anticipating that as we go in. Now, we have other questions that we have in regards to, you know, is it a good time to sell or buy in the fourth quarter? Because, oh, it's the end of the year. Oh, should I wait till next year? Well, listings do slow down normally in the fourth quarter. Fewer people are putting their homes on the market during the holidays because they're showing a home and it's got to be that perfect setup and it can't be whatever. I got it. But you also have motivated sellers during that time. Not that that doesn't mean you're pounding them and lowering their listing price because it might be listed perfectly correct, but they're motivated. That's why they're there. They could be relocating for the next year. They could be downsizing, maybe closing out the end of the financial year. Maybe there's some tax implications. That's why they're starting maybe here in September before the fourth quarter. Maybe there are some negotiating opportunities, and that's up to your realtor, your professional, to work those out and understand what's going on and what the price is and see if it's in that fashion. But you do face less competition normally during this time because some people do shut down and don't look to buy. You're out. Maybe you don't have as much competition from those like you. The same ones that made the offer that you didn't get, that they didn't get, that now we're there looking at the same next house because you guys have similar tastes. So there is a window of opportunity there for you. There is a timeline that you should be looking to that. And that is really what's important. It's getting the right information. Just because you have the scalpel doesn't mean you should make the cut. You need to understand the market and everything about it. I mean, I can't pretend to do your job. You do your job very well. I may understand it, but it doesn't mean I can do it. It's the new guy on the job who's going, well, I have no idea. And again, with technology, that's kind of the thing now. I'm learning every aspect and I think I know what I'm doing until I find out I don't. And then you try to fix it, and then you don't want to make sure you just didn't screw it up. And then when you ask for help, and then someone's whatever on the line, and then they're anyhow. So I got to find a good 6-year-old to help me with my technology. So if you're out there, you're 6 years old, I'm sure you know a lot more than most, and I'm ready to ask for help. Anyhow, ITs. But when I look at the end of the quarter in a checklist, I want you to compare your current interest rate, your current payment to maybe what can be done and maybe what can give you a little bit more relief. Love to evaluate that with you. If you financed over the last year or two, there's room to improve. And then reallocate your monthlies to eliminate other debt. If there's no other debt, then we're going to chunk down some of that principal or interest to get more principal going towards to pay off your debt even sooner, because the lower rate can do that. Or if we stretch it to pay other items, we can show better progress. And I can show you that and illustrate that for you. I want you to review your taxes, your property taxes, as they're going to be coming up here in the fourth quarter. I want you to take a look at your insurance escrows. Some of you have your taxes and insurance impounded. If you bought a property over the last year, you're going to have supplemental taxes. I want to make sure your impound account is proper. It has the right amount coming out monthly so you don't have a shortage and all of a sudden you have a nice, oh my gosh, we want to get paid back. What do you mean payback? Okay. So take a look at your statement, make sure your taxes and insurance are correct. Understand when your renewal is for your insurance and understand what the opportunities are, whether it's with your current insurance or you're going to be left in the cold. You need to understand what your policy is. Look at your limits on your policy. Is it a 5% limit or are you still sitting with 250 paying through the nose? So you want to use your homeowner's insurance not as, oh gosh, I'm going to file because you'll be canceled. You need to look at it as catastrophic insurance. I want you to revisit your estate plan. Last week, we had Marisha on the show talking about revocable, irrevocable trusts. You need to understand if you have a trust, is it updated? Do you have the right beneficiaries? If you don't have a trust and you own a home, you should, because probate will be your answer. So you want to make sure you're set up properly. You want to evaluate the equity in your property. Let's look at a home equity line of credit to make sure you are there with a buffer behind you. Because when you need it, you're not going to be able to get it. It's when you don't need it, you should get it. So a home equity line of credit, you will not necessarily have a payment to make if you're not using it. But if you're in that position, as I said earlier, I want to show you how to rinse, repeat. Rinse, repeat. Use it, pay down the amortized loan with simple interest, and then rinse and repeat with your income and gain a better outcome. Sounds easy. But when you do the laundry, sometimes you do something wrong and oh my God, the clothes come out and you got this streak on it or a color changed. Something will happen. You could be very careful, but you're not going to get it perfectly right. And I want to show you how that's done. Tuesday night, 6 p.m., a 1-hour webinar. Send me an email, interest@aheadformoney.com. And I hear you. I can't go on Tuesday night. I have something else I got to do. Okay. Send me the email anyway. I'll send you some information. I'll send you my calendar. I'll schedule to your schedule based on mine. Sounds complicated there, huh? But I'm looking to talk with you. I want to find out what I can do to help you. I can do the presentation. It was nice to have it on one night. Everyone show up. That's great. My goal is to do one-on-one presentations, whether you're professionals in the business or other loan professionals helping their clients achieve more. I have many people that I speak to, my colleagues, who are helping their past clients pay off their 3, 4, 5% loan in as little as 1/3 or 1/2 the time without changing their lifestyle. If you're a mortgage loan originator, I want to speak with you because your clients are waiting to hear back from you and you think they're set at 3%. I want you to talk with them. 888-543-3980. We ran out of time. I had so much more to talk about, but that means you're coming back next week. Until then, I'm Mike Harris. What kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-90.
Let's get that budgeting right. I talked about planning for the fourth quarter and it going into 2026. Let's button it up a little bit at the end of the year. You got to get ready for taxes. Oh my gosh, so early. Getting ready for taxes, buttoning up, but let's get 26 started right. Let's do it now. Let's look at everything that I just been speaking about on the program and let's get that right. Give us a call. 888-543-3980. 888-543-3980. Join me on Tuesday night. Interest at aheadformoney.com. Until then, what kind of loan do you have?